Hey, what's up, good people? This is Larry. Listen, it doesn't matter if the market turns out red or green today. I'm going to play you a video from this gentleman that runs a venture capital fund. And I want you to listen to everything he says because I agree with everything he says. And I rarely agree 100% with everything that someone says. But this gentleman says it in the way he talks about the interest rate hikes and how it affects the valuation of the market, the drops in the market, but the evaluation on your stock. So what happens, what he's saying is, as interest rates go up, it makes actually, in an odd way, it makes your stock more expensive. The PE becomes more expensive based on how many times the Fed is going to raise the interest rates. Okay. Then at the end, he talks, another gentleman talks about we wait for the stock to come down in a price where we can get them. But when it happens, it spooks us and we actually don't get them. Right now, kind of both sides of the coin, right? Pendulum swinging on both sides. But what I want you to know is there is a time to get it. There is a time to get these stocks, okay? And we want to make sure that the timing is right. And the best thing to do is to dollar cost average in at this point. Dollar cost average in, all right? And so let me just play it for you right now.
I want to make sure that our viewers know that we have a sense of context. Okay, Gene? Because I get it, stocks are down a couple of percent. All right, yeah. I'm old enough to remember when a 10% down move was not that big of a deal. Still, we're dealing with a generation of new traders. They really haven't had to deal with this. Of course, outside of the pandemic-led drop-off in 2020, that was kind of its own exogenous event. Let's not forget, from September to December of 2019, the Nasdaq fell 22%. And it ultimately was a buy. What's your take on the macro move that we are starting to see in these markets? Buying opportunity or not yet?
Not yet. I think I would generally echo some of the same commentary from the traders today. I think that there's still some downside, and of course, especially with these higher multiple companies. And the way I would assess it is kind of making a very strong line between the near term, the next 3 months, and the long term beyond 3 months. And in the near term, what I see going on is a game of Fed roulette, and this creates investor anxiety. You're right. I remember those days, those 10% down, but down 2.5%. That is a 2 standard deviation move. Those are they are less. They don't happen very often. And of course, fear creates more fear. And then the question for me, what it comes down to answer your question, at what point do we get through this? At what point do people start? Can they be more aggressive? I think that there just needs to be a simple resetting of expectations from the Fed. As I mentioned, this Fed roulette, it happens. There's a direct correlation between somebody from the Fed talks and the market goes down. And what I'm hearing there is investors are saying, I don't know what the Fed is going to do. And we know inflation is bad. We've established that. And at some level, the Fed needs to take control here. They need to give investors a clear direction of what they're doing. And I know they're not operating in a perfect environment. But if they would just say, we're going to raise it 4 times, and guess what? We're going to make that first raise 50 basis points. The market would be down 5% on that, but then I think it would be done. At least we would know. And in this point, the worst thing that the Fed can do at the end of the month is to say Omicron, and Omicron is bad, don't get me wrong, but if they just kind of play this off like we can't make any decisions now, that would be a disaster, I think, to the market. And ultimately, I think the market needs its medicine, and that's what I'm hoping will finally get this cloud to clear.
So, Gene, what I hear you saying is this is a rate environment that ultimately mega cap tech can tolerate. I believe that. Again, the kind of rate move I think we can get out of the Fed in the near term or should expect. So what do you do as an analyst? We can judge what this means in terms of asset flows and passive markets, and we do that every day because of the weighting of these stocks. But how about a 20 to 50 basis point move to the valuations of these stocks? Tell the audience what that means to you as an analyst.
So every 1% change in the Fed fund rates typically impacts the valuation by 10 to 20% for these companies. And so, there's a projected 1.5%, 2% move. It is a measurable impact. And so that is part of the reason why I said we're not through this, is we still need to digest those changes. If we can get clarity about where the rates are going, then the market can identify that and can move on. But that's, Tim, to answer your question, is that's the impact. I would say that if there was somebody who was more optimistic, at least over the next few weeks than I would, they would argue that that's true, that dynamic is true about the 1% impact, but they would argue that that you're going to see this inflationary pressures are going to create upside to earnings that will offset that 10 to 20% headwind. And so you do have an environment. We think about how strong Facebook and Google's business was last year. A lot of that was ad pricing that went up because of inflation. They're going to benefit from these. And so, unfortunately, from a fundamental perspective, there's a lot of conflicting data.
Gene, repeat that. I think is really important what you just said. Every 1% move, which would be 4 rate hikes, assuming they're a quarter point each, takes 10% off of valuation? 10
to 20. Now, we've seen some of this. Nasdaq's 6% off, but if you assume we go to a 1.5% Fed funds rate, that would assume there's another 5 to 10% downside to the Nasdaq.
Gene Munster, Loop, really important stuff there, Gene. We do appreciate that. So, Guy Adami, I'm not that good at math, but thank you. Guy, I'm not that great at math, but you think about it. If Gene's right in the history, let's say you got a stock 30 times earnings, okay, we raise Fed funds by 1%, or the market thinks you will because they're going to act before the Fed actually does it, so that's 10 to 20%, 3 to 6. So you take the stock down to, say, a 26 times earnings instead of 30 times earnings. I wonder if it's that rational.
I think it is that rational. Now, it won't feel rational, and we speak about this all the time. Pete talks about this too. I mean, it never, on the way down, everybody's hoping for lower prices to buy things cheaper, and they'll always say it, I wish I could buy X at this price. But then when it happens, it's never for the reasons that you thought that would get you there, if that makes sense, and you become petrified. But if you have a plan in place, this becomes very rational, and to your point,
so, I mean, it's one of those things that when you see for, all of 2020, right? Charge point at $18 was a buy, right? So it's a buy. So you're still thinking it's 2020 where charge point at $18 is a buy. But because the Fed is going to raise the interest rates, now it's not a buy at 18. As a matter of fact, it may get down to $12, right? Now, the buy that was at 18 is now at $12. So I would be very careful if you're looking at loading up on Palantir, if you're looking at loading up on SoFi and ChargePoint and stock like that. The game has changed. And what I want to tell you is don't let that money burn a hole in your pocket. Don't get excited with these low prices and go all in. Now, remember, anything I say is not a suggestion for you to buy, hold, or sell. All I'm saying is cut your money up. And I don't mean in the 3 or 4 times. I mean cut your money up for like 3 or 4 months in dollar cost average. Because the best thing you could do right now is that. Because we could have a great day. We can have another green day Tuesday or Wednesday. Because remember, Monday the market is closed. And you think the coast is clear now, right? And then it further tanks, all right? So I've been through a market like this many times. Now is the absolute best time to dollar cost average in, and don't go all in at one time. I'm going to keep saying the same message until somebody hears me, and don't go all in and lose all their money when the floor drops. All right, good people? Hey, now you can go ahead, like, subscribe, and hit the notification bell. Make sure you check all my links below, and we're going to see you later, good people. All right? I just wanted to hit you guys with that early, okay? if you see stuff that's on sale. Now remember, if you think it's at the absolute bottom, then you go ahead and buy. But you have to do your own due diligence. I just want to shine a light on the entire picture, right? Love you guys. We'll see you later. Live, love, laugh, and learn.